Hello, everyone. So today I'm going to take you through a simple spreadsheet that you can use to make your projections for year 1 and year 2. In your edupreneur journey, as we discussed in some of our early videos, you'll have to get a sense of your financial situation, of your unique financial situation, and see how much money you'll need to run your operations on year 1 and year 2. So the sheet that I'm taking you through today was actually made by Christoph Jans, and he's written about this in a blog called The Angel VC, and it's actually a projection that was used to project expenditure and costs for a simple SaaS product. So I'll be sharing the link of that directly leads you to that source as part of our video description. So yeah, that's where we have drawn the inspiration from. And let me start by sharing my screen. So here goes. I'm guessing all of you can see the screen. So this document has 3 sheets, right? It's got a cost sheet, it's got a revenue sheet, and a financial model sheet. So it's across these 3 documents that we'll be figuring out how to do our financial projections. Just to note, all the fields that have been colored in beige are tweakable. So these are all the numbers that you can play around with. We have already added some fields for accounting for a lot of the costs that you might incur. But if you are adding additional fields, if you're adding additional rows or let's say fields, make sure that the 3rd sheet, that is the financial model sheet, accounts for it in the formula. If you're not making any modifications, if you're just tweaking around with the numbers in beige in both the cost sheet and the revenue sheet, there is nothing to worry. Your financial model sheet will reflect all the numbers and will give you numbers that you can work with. So we'll be sharing the link of the sheet again as part of our video description. You can make a copy, you can edit, and make sure it suits all your needs. Okay, so let me deep dive into the sheet right now. So again, just to reiterate, there are 3 sheets in total: cost, revenue, and financial model. So the cost section is where we are trying to enlist all the costs that we'll incur during our first 2 years of operations. So it can be something as simple as the money that you draw as a salary, or you're paying out to somebody, or you're engaging with a contractor, or you're buying office equipment, any of those, right? So what we've done is we have divided these costs into personal and monthly costs and one-time costs. So personal is basically what we're trying to say is, okay, if you're, so in the case of How to CBC, our company, right, it's 2 founders. So there could be founder 1, founder 2. What I've done is I've given a drop down where you can actually list down the common roles. You can choose from the common roles, and if you feel that you need additional fields, make sure when you add it, the 3rd sheet reflects it. So just mention that again. So here I've assumed that both the founders are drawing an annual package of $60,000. And there is a support function, support engineer who comes in during month 6. So I can decide on the starting month here. In this sheet, again, both the founders are assuming to be drawing salaries from month 1 itself. You can actually tweak this again. You can say month 2, month 3, that's up to you. So for the sake of this calculation, I've kept as both of them starting at month 1. The support function here, I've decided that the person is going to be involved in from month 6, and the annual cost is going to be $20,000. So these are the personal costs again. The next is recurring costs, right? Costs that you might incur on a monthly basis or on a quarterly basis. Here we have listed down monthly basis. For every payment that you collect from a customer, you'll end up paying a payment processing fee, the internet cost that you'll incur, or the hosting, domain hosting costs, etc. Anything that any online cost that you incur on a monthly basis, you can actually bucket under these. And so here, for the sake of this calculation, I put as $20. There are other fees that I've given: technical contractors, marketing contractors, lawyers, legal fees, small bit of travel that you'll do. If you're renting out an office, the rent, I'm guessing, will be paid out monthly. Your internet, office supplies, any kind of SaaS subscriptions that you do, be it Zoom subscription or a ChatGPT subscription. And I've also provisioned out 2 items extra. You can actually modify these line items, and you can say, let's say, entertainment costs. If you're taking your team out for a dinner every month, you can assume that you're assuming that $200 going to spend for it. So you can actually factor that in. So up to you as to what you want to put it as. Extra item 2 is again completely up to your making. So I've provisioned $50 for that. The third bit is one-time costs, things that you will end up spending once. And then, for example, if you bought office furniture, you're not going to pay for it every month. So these are one-time costs that I've put as, let's say, for office equipment, I've put it as $500. Then there is item 1, item 2 that is up to you to modify and factor in as per your needs. So this sort of sums up our costs section completely. The next bit is where things get really exciting because we're talking about revenue, the money that you make. So the revenue sheet is rather simple. We are assuming that we have divided it into year 1 and year 2 and further divided into 4 quarters per year. Right now, we are assuming that again, the sections in beige are editable. So up to you what price point you want to put it. This first line item is basically price point of the product. So I'm assuming that you will price your product at, let's say, $100 for the first 2 quarters. And then by quarter 3, you'll increase the price point to 150. You'll maintain it for the same for the next 2 quarters, that is quarter 3 and quarter 4. And by next year, first quarter, you're increasing the price point to $200 and you're maintaining it at that same level. So again, completely up to you to modify to, for example, you can even go out and say, I'm increasing the price of $2,000 or $20,000, but it's completely up to you. It will reflect in the final results. So for the sake of this calculation, I'm keeping it at $200 itself. Now, when you put more effort into your marketing, when you put more effort into growing your customer base, you will notice at every quarter, you will grow at a certain rate. Now, it can vary month to month. There is no fixed rate, but I'm assuming that here, for the simplicity of this calculation, we are assuming that every quarter, your growth remains the same. And when you move from quarter 1 to quarter 2, your growth increases slightly. Again, these percentages are completely up to you to decide based on how bullish you are about your business growing. So up to you to modify these numbers. The next bit, this bit is where you're thinking about how many customers you will land on month 1. Now, this is important to put a number to it because it's based on this number and based on the growth numbers that we'll calculate how fast your business will grow, how many customers you will have each month. So up to you to decide. So I've put a number as 10, and you will notice when I change these numbers, the financial model change. Okay, so now since we're done with costs and revenue, we can actually see the numbers reflect in our financial model sheet. It looks big, but it's fairly simple. We are assuming your revenue growing steadily. For example, you'll notice that we price the product at $100. You will notice the price remaining the same. And then slowly, by the time it's quarter 3 and quarter 4, you will notice the price point going up to $150. And the next year, you'll notice that the price is steady at $200. Based on the initial numbers that you put, for example, we assume that you will have 10 customers in month 1. You will notice the customer count increasing slightly. And towards the end of year 2, you will notice it really raking the numbers because your growth rate, we had assumed as nearly 11% or 12% by the end of quarter 4. So yeah, and then you'll notice the monthly revenue being calculated. Fairly straightforward calculation. This is the figure in green is basically the amount of money that you bring in every month. Next, we move on to the costs. The annual package has been divided into 12 equal monthly divisions. So you will see that since we had given the annual package $60,000, both the founders are drawing $5,000 per month. And you'll notice the support function costs kick in from month 6. So if you can see, I'll modify this to, let's say, month 10, right? You will notice that the financial model changes accordingly and the costs come in only in month 10. So yeah, all these numbers are this sheet is basically a real-time calculation. It will reflect based on the numbers. So let me just tweak around and see how the numbers are changing, right? So I'm assuming $50,000 and for founder 1 and $100,000 for founder 2, and you will notice the numbers change accordingly. See, founder 1 is now drawing half as founder 2. So yeah, again, that's fairly straightforward. And the hosting charges and the miscellaneous charges that we had not accounted for right now, but some of these charges we had already put in. For example, SaaS subscription or entertainment, you'll notice them reflecting every month. So you'll notice these figures sort of emerge here. And the one-time cost we have accounted for month 1. So whatever cost that you put here, So I'm assuming it'll be $20,000 for line item 2. You will notice it reflect here as a total of 20.5K USD. Now, these numbers will also start giving you the funds required. Basically, this is the gap that you will encounter on a monthly basis. You will see that your revenue does not match up to the expenditure you have. And we can even tweak it. I can even tweak it to a scenario where it shows profits, but this figure will give you the amount of money that you need on a monthly basis to cover your costs for that month. So if I am to compute this for year 1, for these numbers that I've put in, it roughly comes to $250,000. This is what you will require to cover your costs for year 1. And you'll notice that half of that, nearly $75,000 is what is required for year 2. So let me modify the numbers slightly so we keep costs kind of realistic. So assuming that the founders are not taking too much money in year 1 for both years, we're talking about $30,000 being drawn, and support function is being managed with an annual package of, let's say, $5,000, right? And it comes in on the month 6. We're not having these large.
Founder 2 is taking $300,000.
Oh, I made a mistake. Okay, I'll modify that. So yeah, I'll remove the one-time cost to 0. So wait, let me put it back to $30,000. Yes. Now, hosting an internet, maybe increase charge to, let's say, $100 to reflect the ground realities. We're not spending so much on entertainment for during our formative years. Maybe we will have a little bit of travel coming in every month, $100, or let's say, okay, $1,000. Sorry about that. 1,000, let's say, okay, $250 every month you're spending on travel. Right, we're going slightly aggressive on our marketing, and we are having or on our marketing efforts, and we have 15 customers. We're gonna be a little more conservative with respect to our growth rates. We're keeping it at, let's say, 8 throughout. We're expecting steady growth. So now you will see the numbers kind of revised, and you'll see that you basically need $35,000 for year 1. And the second year, you're making a handsome profit of nearly $60,000. So yeah, this is how you can actually have so this, I wouldn't call this strictly back of the envelope. This is actually one level higher to that. But as and when your business get more, there are more cost equations, there are more revenue channels, and you're, let's say you're working with more partners, you have more than one revenue channel, if you have more than one product, these things change. But this sheet would be good enough for you to get started in your first year of operations. So yeah, that's pretty much it.
Awesome.
Okay, so we will follow this up with another video on the second part of what funding avenues are available. But yeah, that's it from now from us.